Hello guys, and welcome to my live stream. Today we are going to look at some basic TA, which stands for technical analysis. I'm going to show you how trends work, how trends line work. I want to talk to you about Fibonacci and converging momentum indicators. I will tell you in a moment what all of those things mean, in case you are not familiar with it. And to explain all of these things, I am going to use the Lisk chart because it's a hot topic right now. Everyone is talking about it in the group. So I decided that might just be best for now because people might actually find it useful apart from the technical analysis side. So without further ado, I would like to start. Oh, hold on. I would like to start with mapping trends. So that means just for the ones that are totally unfamiliar with TA, a trend is when a price is consistently moving in the same direction. So you could say, for example, that this was a trend. How do I map this properly? Vertical. There we go. As you can see, between these two lines, the price went up consistently. So that's what we call a bullish trend. And bull stands for an upwards trend. Now we have the same story in these two lines. This is called a bearish trend. And bearish stands for a downtrend. So the price is consistently moving down. And I would like to talk to you about recognizing the start of these trends and also recognizing when these trends actually end. And in order to do that, we will need some momentum indicators. And momentum indicators are best used if you use more than one of them. And one of those indicators is called the relative strength index. And the relative strength index is an indicator that is in convergence with the price, and it will show you momentum. So as you can see on the right side, it ranges from 20 to 80, sometimes a little higher, but that's usually the range where it will be. As you can see, there are two lines here, one on top, one on the bottom, and we have, just like it might look a little bit chaotic to you, but we have a line that moves along with the trend. Now, what is this indicator used for? It is used for spotting overbought and oversold conditions. And what are those conditions? If a trend is moving upwards, for example, as you can see, I'm going to use the start of the trend here. When the trend is moving upwards, as you can see, the RSI, or relative strength index, will actually move with the trend. They will both go upwards. And if I zoom in on the price here, so this was the start of the bullish trend. And how could you have recognized this? It's very easy. The price remained stable, so it didn't really change. But the relative strength index, on the other hand, it started making a move upwards. So right here, let me just make a vertical line. Right here, before the price shot into the sky, the relative strength index started moving upwards, the price stayed behind, and this is what we call a divergence, when the indicator is moving in the opposite direction of the price. And it's pretty easy to spot here, because as you can see, the price remained pretty much at the exact same level here. It remained very stable, but the relative strength index went up and made a couple of tries to go back down, didn't succeed. And you could potentially have spotted this reversal already from this price point. So where I will put the blue line. That is when you could have spotted, okay, the RSI is making a big move up. The price isn't, so something has got to happen. You know, if I just put it like this, on the right side, price staying the same, RSI moving up. And as you can see, shortly after maybe 1 or 2 days, the price started moving into the same direction. And if it was me, I would have bought here. And then we come to a point, okay, we have spotted the divergence, and divergence means when the indicator is doing something else than the price range. We bought. Okay, so now let's say we bought at this price point right here. So on the red line, I will move the blue line, that's our buy point. And we are moving up, we are making gains. Then how do we know when this will indeed return or go down, when the bullish trend will end? Of course, we had a large bullish trend here. And if I would scroll out to the weekly charts, I could show it. But for now, for the purpose of demonstration, I would just like to demonstrate it here. And in fact, we have the exact same story. Only this time, it's the other way around. As you can see, the price went up, made a new high here. And I'm talking about a closed candle. I'm not talking about this little stick here. I'm talking about a closed candle. And the relative strength index, the RSI, let me draw this out if you have a small moment. So the price went up, but the RSI didn't. See, there's the price is higher here than it was before, but the RSI, it actually did not make a new high as the price did. And shortly after, the RSI started going down, and so did the price. Not by a lot, of course. It's the idea. And how could you have spotted this as well? As you can see, there are two lines here, one at 70, one at 30. And I recommend when the RSI is over the overbought line, which means too many people are buying it, way more people are buying it than the people that are selling. So that means a correction will have to come. People will have to sell eventually. That's known as an overbought state, and it happens when you cross this line. That should have been a signal, or it could have been a signal, that things were about to reverse. And this pattern actually repeats itself. I will just take my cursor. As you can see, the RSI kept going down, 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 and it never really made a new high. Until we came at a point, of course, which is right around here. I think I should extend that a little bit. Hold on. Which is right around here. At this point, the RSI started moving up, and it broke the previous top here on the RSI. The price followed, so that means a reversal is very likely. They are both moving up, and we can continue the trend. And then again, as you can see here, we have a top, we have a lower RSI, and the price is slightly lower than it was before. But if you look at the RSI, this is a major fall. If I compare the angle of this line to the angle of the line over here, you see there is a big difference. So a correction will be likely to follow. And also we were again overbought here. Should be an easy to spot signal. And this is just rinse and repeat, guys. This is just rinse and repeat. It just kept doing the same thing. Overbought, correction, new high here. See, look at this. Lower price point, high price point. And then again, it broke out into a new high. It got overbought. The price leveled out. The RSI went into a downtrend. And this should be a major signal to you. If the price is leveling out at a certain level and the RSI is moving in a certain direction, which is down, then you could possibly have known that there would be a correction. So that is basically how I use the RSI. And of course, there are more swing indicators. For example, you have the MACD. And I want to explain how the MACD works. The MACD uses two moving averages. And just to demonstrate, a moving average is the average a price has been over an X amount of days. You can set the amount of days for yourself. For example, if I go to indicators, and I type in moving average, I should, oh no, of course, this is Koeniji. Okay, that only works on TradingView. I'm sorry. Not really used to Koeniji. But anyway, oh, it does. If you click the little plus on the top left side, it says MA, the moving average. And if you click the little wheel, you can adjust the length, so the amount of days. And this gives you the average price the price has been over the last X amount of days. Now, what does the MACD do? The MACD actually combines a long time frame moving average and a short time frame moving average and puts those two into a chart. And what does this show us? It shows us the difference between the average price of the long term versus the average price of the short term trading. And as you can see, when we are making big moves, so for example, this is a really, really strong move up. It's very powerful. We start to see that those two moving averages are moving away from each other. They are really close to each other here. After the strong move, they are far apart. Now this shows us, if you have a gap like this, that a price is either overbought or oversold. If the blue line is on top, it's overbought. If the blue line is on the bottom and the red one is on top, it's oversold. Or as long as the gap is great, of course. As you can see, the price never really was severely overbought or oversold here, because the two moving averages were moving really close together. But after this move, they got really far apart. This should be a heads up to you, like, okay, the price has made a strong move. We could potentially see a correction. And then when this moving average is crossed, it usually means we have turned into some kind of bearish trend. Doesn't always have to be. They can cross over in a second and resume the trend. But that should have told you. And what I like to do is combine multiple of these indicators to see if I can actually find some info here. And after this pump, I should have been able to see it because it was overbought. So it was above this line at 70. That means too many people are buying. After the pump, the RSI just continuously made lower highs. It just kept going lower. The MACD was far apart, as you can see over here. And then eventually even they crossed into a bearish trend. So if I combine all those, those signals, should have told me sell right at this point. In all honesty, I would never have taken the top, but I would have known probably by looking at this Like, okay, so the trend might be reversing, I'm going to sell. Now let's take the knowledge that I just told you guys. If there's any questions, please just put it in the chat. Let me know. Let's take this knowledge and let's apply it to the recent pump. And for this, I would like to probably go to the 4-hour chart. No, it's too messy. Let's go to the daily chart. I would like to probably go to the daily chart. And let's actually see what is happening here. So, first of all, we look at the price. What is the price doing? The price is setting a low. It's trying to regain its strength. It failed. It sets a lower low. And then it sets a lower high. I think all of you must know this. This is just a downtrend. Simple as that. It continues lower lows, lower highs. This should be clear to all of you. Now, if we look at the indicators, we can see two different things here. First of all, the MACD, the two moving averages have always been apart during this whole downtrend. So all the way from here to possibly here, they have been apart. That's the first thing you can spot. Now, what is the second thing we can see here with the MACD? The line's closed on this point, plus the price made a new low right over here. It got lower than it was before, but the MACD did not. It did not make a new low. Now, this is called divergence. As I said before, the indicator is showing us something else than the price is showing us. So, okay, it might possibly go up. And as you can see, it's going up right now. We have the exact same thing for the RSI. We have a new high here. The candle closed higher. On the RSI, we have a lower high. And as you can see, this is called divergence. As I said before, remember divergence, very important. We have a lower high on the RSI, higher high on the price, and something is wrong. We are probably going to reverse trend, and we did. Now, on the current situation, it's the exact same story on the RSI. The RSI is actually rising. It did not make a new low, but the price did. So we get a pretty steep correction as of now. Should you have been expecting this? Yes, you should. Let me just tell you why. If you draw a trend line, and a trend line is nothing else than connecting the bottoms of the previous chart or the previous price points together. So we have a bottom on March 12th, 2017. Then we have another bottom here on May the 16th, 2017. And if I connect these two, as you can see, we did pass through it. So I agree. Possibly some of you or even me might have drawn the chart like this. But I think this was a fake out, and so it doesn't really count. So if we draw the chart like this, we can see it bounces really nicely if we just leave this out of perspective. And you might think, okay, why are you doing that? I am doing that because altcoins are basically, how do I say this? These are charts on drugs. They respond extremely hard to positive and negative feelings. And most of the times you will actually have to cut parts like these. Parts like these don't happen in normal stocks or rarely happen because there's much more volume, much more orders, etc., etc. So that's why I'm drawing this in this way for now. Now, what do I think is going to happen here in the coming days? We are going to zoom in all the way to the 1 hour. And this will, of course, show us the exact same thing. This is the 1 hour chart. We have a low, and we have a higher low. We have a much higher low on the RSI, and we have a much higher low on the MACD. So these two indicators confirmed that this trend was valid. Now let's just say for example, the RSI went lower on this point. That would have told us that this trend is probably not finished. Of course it didn't. It showed us the trend was finished. And if you draw a resistance line, which I usually make red, if you draw a resistance line, you can see it clearly broke out, and the resistance line is nothing more than connected tops of the trend. It clearly broke out. What do I think is going to happen here? Very simple. The MACD is moving closer together. It's probably going to cross. We are currently in an overbought status. Now, if I draw a trend line on the RSI, what I think is going to happen is the following. We are going back down into the previous top on the left. Let me put this a bit lower, probably. I'm looking at, yeah, this seems like a really strong, you know, this is something I cannot teach you. You have to learn it yourself, and you have to do it by looking at charts for hours and hours a day. This is a hidden support. As you can see, we tested it here. The support didn't exist yet on this point. It started to exist on the 17th. We bounced, we broke through, we retested, and now we broke through again. And I think the RSI will have to come down into this level again. So I draw a trend line there. Same thing for the MACD. It has to come down to the support, which I drawn by connecting the two lows. And probably the price will see a correction to this level, which is about 85,000 before, excuse me, before we can continue the trend and really go for a bull run. That's what I would think is going to happen right now. So that is how you use the RSI and the MACD. I'm going to look at some questions now. Let me see. Rising sun, according to me anyway, time frames you should use are always on your shortest term trades, 1 hour. You know, I see some people who are going to do this 5-minute charts. You know, are you going to make any sense of this? No. I find it extremely difficult to trade 5-minute charts on Amazon and Google stocks. Now, let alone on cryptocurrency, it's impossible. It doesn't make any sense. If I'm a whale, I can manipulate this extremely hard. It's much harder to manipulate the hourly, so always use the hourly for a minimum. And this should be your shortest trades, which would be, for example, in today and out by the end of the week. Those are the shortest term trades you should look at. Now, next, we have the 4-hour chart, which is something I use a lot. Usually, I use this one for my trades that span possibly a month. So let's say I buy at the first of the month and I sell at the end of the month. Now, then, of course, you have the daily chart, and that should be the maximum range to use, except if you're trading Bitcoin, of course. This is the daily chart, and I use this for also monthly trading, but sometimes even yearly trading. So I buy it this month and I sell it in 6 months. Rising sun, if you would like to understand the mathematics behind it, first of all, I don't think there's any added value to it, honestly. If you know how to use the indicator, I can drive a car. I know perfectly how to drive a car. I'm really good at it. But if you ask me to go and change some valves, I'm completely lost. And it's the same with trading. If you want to know it, you should probably go to investopedia.com. And in Investopedia, you can see everything. You can find the deepest knowledge of every indicator, the exact formulas behind it. And if that's your thing, then you should totally do it. What was the blue line on the MACD? The blue line is the shortest time frame moving average. So it's, for example, the time frame of 7 days and the average price of that, and the red one will be the average price of the past month. So now we have had the swing indicators. I'm going to show you Fibonacci, and I'm going to show you unbalanced volume. Hold on for a sec. Unbalanced volume. I like to call the unbalanced volume my whale indicator. You can write it like OBV and it will come up. And this is my whale indicator. This indicator shows you how much money is flowing in or out of an instrument. So in or out of a coin. And why is this very nice? We saw divergence on the RSI. I've removed the RSI, but we saw it right here. And we also see that a lot of money is being sold out at this point here. You can see a steep descent. Somebody is selling off a lot of coins here. You could not necessarily see it if you look at the volume, because there are a lot of green candles. There are some small reds, but somebody is selling off a lot of coins here. And this is probably a whale exiting his position. Let me see if there's any chart that shows it better. No, that was not it. ETP, maybe? No, I had a chart and I completely forget which one it was. Maybe I'll come back to it later, but it showed it really nice. But this is my whale indicator. It shows me where the money is flowing. Is it flowing in a coin? Is it flowing out of a coin? And that's how I like to use it. No more, no less. Next, it's going to be as a request, but also as something I would like to do. If you click on the left side of your chart, you will find Fib retracement, aka Fibonacci retracement. First of all, Fibonacci was a guy, and he discovered that in nature and also in charts, basically in everything, there is a sequence of numbers. And the sequence of numbers is 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, 5 plus 3 is 8, and so on and so on. And somehow, don't ask me why, nature always honors this number and actually incorporates it into living things. If you could take out your Fibonacci spiral and measure it on a human, and it will be perfect. So that is what Fibonacci is. I will not go into the technicals any deeper, but I will show you how to use it. If you take the Fibonacci on the left, what you have to do is, in a bull trend, look for the top, excuse me, the top, click and drag it down to the bottom. If you're in a bear trend, you have to do the exact opposite thing. You have to click on the bottom, pull it down to the top. Now, as you can see, there are some lines in our screen. And these lines are levels based on the mathematics of Mr. Fibonacci. And somehow in trading, these lines are always honored. So if you have drawn your chart from top to bottom, you can see, for example, after a bit of trading, we bounced perfectly off the 0 to 3 Fibonacci level. It touched the line, the downtrend got completed, and it moved up. Now, what can you use these levels for? For two different things. You can use them to trade between lows and highs. So we have a high here. Here's our high. Here's our low. Oh, excuse me. Let's say I want to trade between these levels. I will draw my chart. And let's say, for example, this whole up move got completed. I could base my entry, and you can see a lot of people did, on Fibonacci charts. For example, a lot of people thought, okay, possibly we will bounce at the 0.618 level. So that was a small bounce, but the price wasn't strong enough. And that is when our momentum indicators come in. There was no reason to suggest that the price would reverse here. We had a low here, we had another low, and you know, the RSI didn't level out anywhere. For example, right here, we have had 3 bounces. One, a lower low, which is only slightly lower, while the price is a lot lower, and we have a higher low. You know, that is something you can base your trade off, like I showed before. And if you want to base your trade off that, that is when you take out your Fibonacci levels and measure the closest Fibonacci level to your trade, which would be, in this case, be 0 to 3 level, and buy there. Now, let's say you bought there. I would tell you, look for either two things. Either the RSI will keep on making higher lows and higher highs all the way into overbought, and if it gets overbought, you should sell, absolutely. Or scenario 2, we make a low, we make a high, and we make a lower low and a lower high while the price keeps on rising, and that will also tell us that it is time to sell and that we are having divergence and we should probably exit our position, like I showed you before on the previous stop. Yeah, exactly, Rising Sun. I agree. I agree, absolutely. That's what I usually do. If you take the unbalanced volume and the RSI, we have a higher top here, but a lot of coins have actually got sold. The RSI is consistently making lower lows, going down, and that is when you should know it is probably time to sell. And that's why these two indicators work so well together. Also with the MACD, of course. You have a lot of other indicators, for example, the Ishimoku cloud. I'm not going into that for now. This is a little bit more advanced. So that will be kept for future videos, probably by the end of the week. This is one I would really like to cover. Now, what else is there to teach you today? I think this is enough material for you guys to split through. Of course, I want you guys not to only watch my video. Go to Investopedia, type in RSI, go and read it. It's a great page. If you have any questions, please just come to me. Go to Crypto Hedge. You know, if you've learned something from this, make a chart and post it to me and tell me what you think is going to happen, and I will tell you, that this is nice or this could be better. And I'm not always right as well. I can be wrong. That's trading. One more thing I would like to give to you guys is position taking. I'm not going to tell you where to buy or where to sell, but I'm going to tell you something else. If you take a position, I want you to go to this little symbol on the left, long position, or short if you're shorting, but I'm not going into that right now. And this is a tool for drawing out your entry. So let's say I have an entry here. We will see two things, a green box and a red box. If you fail to either set a target for your trade or to actively monitor your trade for a place to sell based on the RSI, or if you fail to set a stop. So for example, we have a low here on the left, or yeah, let's do it a very simple way. We have a low here on the left, and as we know, lows and highs are support or resistance. And I will tell myself, okay, if we go below this level, my trade will be invalid. If we go, for example, to the last stop, I will sell. You need both of these, so the target, the entry, and the stop for your trade to be a trade. If you forego one of these, you are not trading, you are gambling, and you are better off going to the casino and putting everything on red. So that's something I would really like to tell you guys. You know, and when your trade is profitable, let's say Vertcoin, you can also use the Fibonacci, take the previous top, take the bottom, and you will see extension levels. Something I forgot to mention. These can be used for profit taking. Now, I will take this on the left. What a lot of people do, we break out, I enter here, I say, okay, I'm going to set my stop here. My target will be the first Fibonacci level that we approach. A lot of people, when they reach it, they're just doing this. Oh, this trade is going really well. I'm going to set it one higher. And then the price reaches it. And then, oh, yeah, it's going really well. I'm going to set it one higher. So for example, the price is going up and up and up, and then boom. And the boom or the crash, it usually just keeps going up. And then it does this. Really steep, really harsh, fast decline. You're going to miss out on a ton of profits. So I advise you, if you have set your target to the first level, I'm not saying you should sell everything on your first target. You could say, okay, I'm going to sell 20% or 30% of my position here. And then I think it's going to reach the next one. So that's where I will sell the rest. But don't be stupid and let the trade run and just keep pulling this up, because you will lose out eventually. You're going to lose, man. That's what I see a lot of people doing right now on a multitude of coins. And that is the quickest way to lose your money. Or, for example, let's say we enter the trade here, you expect to go up here, and you set your stop at the previous high, or a little bit below. Now let's say the price goes down. It goes here. And the moment it reaches the stop, people are like, okay, now I'm just going to put this down because, you know, we might see a reversal. And then the price keeps going down, and they keep doing it. And the lower they get, the deeper you are into this shithole, the less likely it is you are going to sell your position, because you're going to lose out 50%. You're going to get emotional. You're going to jump off some buildings. You know, that's not a very desirable position to be in. So honor your stops, honor your targets, and you don't have to sell everything, but at least sell something. Turbo Crypto, that's a good question. How do I decide to set either a stop loss or conditional? That is a position we are in, because not all exchanges support both. So let's say I have entered my position here. And the target is let's say it's here. At this point, I have to keep monitoring my trade every day. We are now on the daily chart, and it is more likely that my target will be hit than that my stop loss will be hit, because we are never going to see a crash like this on Vertcoin. Not gonna happen. So I'm going to set the target. Now let's say we don't make it and the price goes down and down, goes to here. I will just close my target and I will set the stop loss to active, because now it is more likely that we reach the stop loss. And that's how I manage it. So I hope you learned something from this. If not, I'm sorry, first of all. But do not be afraid, just watch the video back. If something is not clear, you can just play back, look again. And if something is not quite clear as you would like, just go to Investopedia, read on it and rewatch it, and maybe you'll understand better then. But I think it should be pretty clear. Which last bit didn't you get? I'm not sure what you mean right now. I will wait for your reaction, because by the time the live stream keeps up, it's already a bit later. What I meant. Oh yeah, of course. That's something you can do, and which is really nice. You can move your stop with the price. So let's say you are chasing Vertcoin, and your stop is this level, and now you've risen. Okay, you can say, okay, I'm going to put my stop higher, and the price will keep increasing. Okay, again, I'm going to put my stop higher, and that way, and I think this will show better on the hourly chart, you can chase the price. So let's say our stop is this level here. Now the price has risen a lot. Then you can say, okay, I'm going to put my stop on this high. Now we are rising again. Okay, I'm going to put my stop on the bottom here. And that way you can keep moving up your stop. And then eventually, when the crash does come, it will crash right into your stop, and you will sell perfectly in time. Order will be executed in a second, and you will have profits. And that is, by the way, called a trailing stop. Bittrex doesn't support it. I know BitMEX does. Some other exchanges do support it, so that it will go up automatically with your trade. But you might have to do it manually on Bittrex. And this way you can make a lot of money, especially on surges like these. To be honest, I'm not going to do some TA on this. So that's basically it, gentlemen. Next time, we are going to deal with breakout trades. So that means breaking out of a downtrend. And we will, of course, deal with the appropriate indicators when we do. For example, a breakout indicator is the Ishimoku. Not going too deep into that now. We have multiple indicators that belong to it, and it's a completely different strategy, which is also good. So probably Saturday. If you have any questions, please reach out to me in the Slack. That's what I'm here for. And yeah, thank you very much for watching, guys. Stay profitable. Have a good night. Bye.